Everyone, this is Kenny Kong with Marathon Money, and I'm glad to be back because this is one of those companies that I have on here who I know they're going to keep coming back on here, but this is one of those funds that are not only following the times, but they're also leading the pack. They're here before Wall Street, and that's the reason why I like them. So I want him to introduce himself, introduce his company, and then I got the questions you all gave me to ask him. So let's get it going.
Hey, Kenny. Great to be on your show. Thank you for the opportunity. My name is Dr. Naj Kidwai. I am a tech entrepreneur. I've taken 4 companies public and most recently C1 Fund in August, which is a closed-ended fund, which basically allows institutional and retail investors to get exposure to the leading digital asset companies today. So companies like Ripple, companies like Figment, Chain Analysis, and many, many others, in a structure that requires no minimums. Anybody with a brokerage account can access us with the ticker CFND and get exposure to the top 30 companies around the world in the digital asset space.
So, when you started this, most of that you're buying in right now is like late stage. You're not taking really chances on early stages or mid stages. So what are your criterias that you're picking these companies out of, like plethora of companies? What's making you pick them? What are you seeing?
So great question, Kenny. We typically target companies that are unicorns in the digital asset space, companies that have done a successful Series C and above, companies that are regulated and licensed in the jurisdictions that they operate in. No tokens, no cryptocurrencies. We invest in straightforward equity. These companies tend to be profitable or very near profitability, and we tend to invest in infrastructure, so banks, wallets, custodian exchanges, security companies, and we're investing in companies all around the world.
So with that in mind, I'm thinking, like, as you talk, and I'm thinking about, okay, so are these late stage scalable? Is that something you're seeing, like, okay, they still have another 100% run or something, and then you can capitalize on that and make it better?
Yeah, so Kenny, we are typically buying these stakes in the secondary market. So they typically come to us at a discount. So because we have a permanent pool of capital, when we are acquiring these stakes, we typically acquire from the founders, from existing investors that are seeking liquidity. And that typically comes at a discount, which could be anywhere from sort of 10 to 50% on their last primary funding round. So our investors are in the money day one because technically we bought that stake at a discount when it comes into the fund.
And then when you buy them at a discount, how long are you? Is this like a 5-10 year hold? Are you waiting for like a certain percentage before you like sell it off, or is this like a long-term hold, like a Warren Buffett type fund?
So Kenny, another great question. We're typically looking, when we're making that investment, with a 1 to 3 year hold. So typically we're looking for liquidity on that investment, either through an M&A activity or an IPO. So typically when these companies are late stage, they are going to be around already for several years. They've got scale, they've got revenues, they've got profitability, and they're actually looking for liquidity for the business. So our view is that when we are investing in those companies, we can see an exit horizon within 3 years of us making that investment.
So I know you're not doing this like completely alone. You must have like a structure, you must have like a team. So tell us about your team. You know what I mean? Because when I think about how you're making these picks, I know you're probably running it through, when you acquire these companies, you're probably running it through several people, several different test models before there is a dollar even spent.
Yeah. So we have obviously the great structure of being a closed-ended fund that's actually listed on the New York Stock Exchange, regulated by the SEC. We're an SEC 40 regulated type of fund. So what that means is that we have 4 independent board directors, and these are people that have worked at NASDAQ, worked at Revolut, worked at SoftBank, real institutional investors that provide that oversight. We also have a very strong investment committee, which includes myself as CEO, our vice chairman, Michael Zhao, who's an ex-regulator from the Central Bank of China. We have Michael Lempress, who is the ex-chief legal officer of Coinbase. He's also on the board of Coinbase Custody, as well as a stellar career as a lawyer in Washington. So we bring very strong corporate governance, and we have a chief investment officer, Elliot Han. So Elliot is also ex-New York Stock Exchange, Cantor Fitzgerald, and Goldman Sachs. So it's a very, very strong team that has been investing in the digital asset space since 2016, so nearly a decade now, understanding risk, compliance, and corporate governance. We were also very early investors in companies like Forge Global, Destiny, which is also a closed-ended fund that gives investors exposure to companies like SpaceX, OpenAI, and Stripe, as well as a platform called Equiem, which is a pre-IPO quant fund. So we've been doing sort of secondary market investing, digital assets for nearly a decade. We understand the corporate governance that comes with that. And I think for our investors, these are not pump and dump schemes. These are not companies that are going to disappear tomorrow. These are companies that are going to become the next Amazon, the next Uber, the next Booking.com, building real infrastructure. So, when I was starting my career in the sort of late 90s, those companies were fly by night, right? Are they going to be around? And 25 years later, Amazon today now is, one of the largest companies on the planet. I always find an interesting statistic that if you'd invested in Amazon, $10,000 in their IPO in 1997, today that would be worth $30 million, right? So you can just sort of, I wish I'd invested in 1997, right? That would have been a pretty good return. Amazon. So what we're saying is that the type of companies that C Fund is investing in are hopefully going to be the next Amazons, the next, Pricelines, Ubers, and all of that. So for us, it's real core infrastructure in companies that are building the next generation of infrastructure for digital assets and services.
So when I think about what you said here, like digital asset service technology, you brought up some companies that are going to be the next Amazon or going to be the next Uber. Can you tell us ones that you already acquired, you have it for some times, and how those are going?
Yeah, so the fund went public in August. We've started investing in positions in September and October. We currently have 3 positions that have been publicly announced, which include Figment, which is a staking provider out of Canada, right? It has over $17 billion staked on its platform. It covers over 50 protocols, and it's a company that's growing very, very rapidly. It already has a multi-billion-dollar valuation. We've just also recently invested in Ripple, which I'm sure a lot of your users may be familiar with. They have a token called XRP, and it's basically rebuilding the infrastructure for the movement of money in the United States. We've just also recently invested in a company called Chain Analysis, which is being used by basically most of the exchanges and governments around the world monitoring crypto transactions. So real hardcore infrastructure. So we've invested in these 3 positions. In fact, we have another several positions that we've invested in, which will be announced over the next couple of weeks. So all of these types of companies are leading companies in the digital asset space that are basically, rewiring the sort of financial system as we currently know it.
So when you talk about Ripple and you talk about the company Fig out in Canada, the other one that you brought up, those are equity positions in those, right?
We only invest in equity in these companies, right? And we have either sourced those stakes directly from existing investors that are seeking liquidity. We typically acquire those stakes at a discount to the last primary funding round that those companies have raised at. So, all of those types of companies and many others that will be coming into the portfolio are companies that already have unicorn status, are growing rapidly, are profitable, are on the path to profitability, and where we as the fund see them having some sort of liquidity within 3 years. And even if that liquidity doesn't come in the public markets, we can always sell our position in the secondary market. So, the fund is there to optimize returns for our investors, who then have invested in C1 Fund.
So I like that you're buying at a discount, and that's always going to be a major criteria for us. Because me, as like when if I'm looking to invest, that if that's your major criteria, to always get something at a discount. So there is a upside you're always seeing, because if you're, so for example, if something's worth $1, but you're getting at what, 40% discount, 30%, is that
Yeah.
certain level of criteria you're looking at? Because I seem like
Look,
that getting something at a discount means it's like a big portion of when you look at a company.
Look, I think one is, when you're looking at a discount, because we have a permanent pool of capital, we can be aggressive in our liquidity ask, right? So if for example, Kenny has a stake in, let's say, Ripple, and I basically say, hey, I want to buy a few $1 million of Ripple, and Kenny says, well, the valuation is 30 billion, and I say, well, Kenny, I think there should be a 30% discount on that. I can give you the money this week. You might be interested in taking that, right? Because it can be completed in a very timely manner. So, every situation is different. Every company is different. I think the one advantage we have as a team is because we know a lot of these founders personally, we know a lot of these companies, we understand their product strategy, roadmap. Actually, I did the world's first crypto-focused SPAC, which we listed on NASDAQ in December 2021, where we raised $230 million. But under the previous SEC regime, obviously under Gary Gensler and then the Biden administration, there was a lot of anti-crypto sentiment. While under Trump, that has gone 360, right? So now you've got a very proactive digital asset administration under Trump and the SEC that are actually providing real clear rules in how to operate in this market. So what that's basically done is, given visibility to this space, and made it much more attractive for people to invest in, not get debanked, not get into trouble, but basically build real businesses with real revenues. And I think the current administration is doing a good job on providing the right frameworks to make that happen.
So when I think about your business and I think about the fund, is blockchain, AI. Am I correct that you're buying AI companies?
Not with this fund. So this is purely focused on blockchain services and technologies. Yeah.
Purely focused on blockchain services and technology. You're not. This fund is not going to move away from that.
No.
So where do you think blockchain is in the scale of adoption right now?
So I think, look, we're still very, very early, right? So if you think about just Bitcoin adoption today is about 3%, right, globally. So still very, very early. It's sort of like 1996 when the internet started, right? So I think, the adoption continues to grow. You've now got the sort of spot Bitcoin ETFs that have been driven by BlackRock and Fidelity, which have now had over $150 billion of inflows in the last 18 months. The most successful ETFs in history, right? Which have been driven by exposure to blockchain, Bitcoin, and digital assets and services. So I think we're still very nascent in adoption, and that's the great growth opportunity for investors. I think now you're starting to hear even people like Goldman Sachs, Morgan Stanley, JP Morgan, they're all institutions that were sort of a little bit nervous around the digital asset space, now advocating. Even Morgan Stanley, I think about a week ago, said that their wealth management clients should look at allocating anywhere up to 2 to 4% of their net worth into the digital asset space. So when you've got people like Morgan Stanley and other large Wall Street institutions saying you should get exposure to this space, what that is showing is that Wall Street is well and truly here. They're behind this, and we are only going to see adoption continue to grow. I always like to describe, in the US, I think there's about 50, 60 million people that have a crypto wallet, a population of 300 million. So we're about 20% penetration in the United States. There is still a huge opportunity for that to grow, right? So what you're going to find is, digital assets is going to become just like Wi-Fi and Bluetooth. It's going to become embedded in the way that we transact, in the way that we consume. I'm sure you've heard Larry Fink talk about tokenization, who's the sort of founder of BlackRock. Everything is ripe for disruption. Everything is ripe for tokenization and fractional ownership. And everything is ripe for being on-chain. So we're very excited. And I think, when you look at the broader market, platforms like C1 Fund that can provide a structure that gives you exposure to the next category defining companies that are privately held, but with the safeguards, liquidity, regulation, scale of the public markets. It's the perfect product at the perfect time for investors today. And we think that, as people start to get exposure today, if I asked you, could you invest in companies like maybe Binance or Tether or, OKX, Binance is 10 times bigger than Coinbase, for example, right? Just from a volume perspective, right? So,
a lot of people don't know that. A lot of people don't. I had another guy. You probably have heard of him. BNC. His stock is BNC.
Right.
He was on here a week and a half ago. His position in Binance and what he told me about Binance, and I'm sick that they don't allow you to have Binance in New York City, but he's 100% right. The adoption of Binance in the Asian and outside of the U.S. is, you're right, it's unbelievably crazy. Unbelievably.
Yeah, so I think for U.S. investors today, Kenny, for you sitting and imagine if I could give you exposure to companies such as Binance or Tether is another company, right, that has this stable coin called USDT. A decade ago, that company had zero market cap. Today, it's 185 billion, right? And it's a phenomenal story. Like less than 100 employees. Last year, they made net profit of $13.4 billion, right? With 85 employees, right? So incredibly profitable. So imagine that, a fund like ours can get exposure to platforms like that, which hopefully will be in the C1 portfolio going forward. Companies such as those, we think is very, very attractive for investors, not only in the United States, but around the world.
Yeah, that's amazing, man. I definitely look forward to it. One thing I do want to ask you, when Larry Fink came on CNBC, what was your thoughts on that? Because I know the tokenization of funds, is that something that you're going to lean towards too? Is that a part of your vision for CF?
Yeah, for CFND, I think, right now, tokenization is still very early, right? And I think, obviously, people like Larry are visionaries, right? They're not thinking about 2 years ahead. They're thinking about 20, 30, 50 years ahead, right?
Well,
so what you're going to see
too, because you're also in that head of the game as well.
Yeah, I mean, look, I think we're fortunate enough, right? I've been in this industry now, for over a decade, and in tech in general for nearly 30 years. So what we see is that the tokenization of everything is definitely in play. We've actually had inbounds with some of the largest financial services players around the world asking us to tokenize our fund, right, on their platforms. I'm obviously at no liberty to say names at the moment, but we are in active discussions with platforms out in Korea, as well as the United States and Europe, that are looking to actually tokenize the C1 fund, where they can provide synthetic exposure to those types of companies through C1 fund. The big advantage we have, Kenny, is that we're regulated, right? A lot of people are very nervous about the digital asset space because there's obviously been horror stories of pump and dump, 100x, and then the stock goes to zero, retail being left holding the bag. And I think when we designed C1, we really thought about retail investors. We thought about, that we don't want to provide that volatility where a stock goes from 7 to 100, right? That is not helpful, right? If you're left buying at 100 and holding the bag. What we want to make sure is that we're building structure. It doesn't matter if Bitcoin is at 50K or 500K, right? We're investing in equity of these companies that are going to be around for a long, long time to come. We typically target a 20% IRR in our fund on an annual basis. And I think, we're here for the long term. We're here to provide that strict discipline on investing in the right companies at the right time, at the right price, for our investors. And I think the beauty for C1 fund is that any investor can get in through their brokerage account. There's no minimums for them. And ultimately, to get exposure to companies like the companies we've talked about today, they're never going to be able to do that on their own, right? And in a structure that is liquid. I think this is the most important thing here, is that you can buy today, you can hold for as long as you like, and then you can have liquidity, partial liquidity, whatever, We expect this stock to trade well as more portfolio companies come in, as more people get to know what we're doing, how we're doing it. But I remember, when we started our conversation here, you talked about, what structure do you have in place? So I think what's very important for us is discipline, a structured investment committee, people that have been investing for 30 years, people that have a legal background, people that understand compliance and risk and regulation, intimately. I think this is all value add to potential investors investing in C1 fund.
Man, I'm definitely excited. I know you said you have a few things coming up for the end of the year. I know you can't talk much, but what does the end of the year and the first 2 quarters of 2026? You don't have to mess with guidance, but just give the investors what's to come. What's in the pipeline? What's in the plan?
The best is to come, right? So I think we're uber excited. I mean, look, this was 4 years in the making, right? To get this structure approved by the SEC, to get public, to be now in the market. So there was a lot of, let's say, technical work that had to be done before we went public. And this was the first time this was done by an IPO, right? So we've had other platforms that have done closed-ended funds, but this was the first time in the digital asset space this was done by an IPO. And again, this was partly designed that it would allow institutional investors to provide institutional research, right? So analyst research will be covered on C1 Fund. We were actually taken public by Benchmark Company, but also we had SoFi as a co-manager on the deal, China Renaissance out of Asia, and Tiger Securities in the US. So we're also hoping that we will be getting institutional coverage based on the portfolio company as that continues to build. Some of the names that we talked about, we hope to have in the fund within the next sort of 6 months. And we're actively pursuing growth opportunities for investors, not only in the United States, but also in Europe and Asia. And there'll be many examples where US capital market investors and retail will not be familiar with some of the companies that are really killing it in the European and Asian markets, right? So you've got a bank, for example, called Sygnum Bank in Singapore. Some people may remember Silvergate Bank and Signature Bank, which were crypto-focused banks in the US. This is a bank in Asia, regulated in Switzerland, that's growing very, very rapidly. And then you have companies like Animoca Brands, right, out of Hong Kong, that are doing a lot of stuff around the sort of digital asset space, right, content creation and tokens. So there are many, many other companies around the world where there are growth opportunities that we can provide investors exposure to. So not just US, but also, I sit in Dubai for a good chunk of my time. And, we see a lot of growth opportunities, not only in the Middle East region, but we've just seen Coinbase invest in CoinDCX in India, which is the leading exchange there at $2.45 billion valuation. So you're now starting to see large US players also come out, right? And I think the other thing that we've started to see, particularly this year, is some of the IPOs that have actually happened, right? So we've obviously had eToro go public, we have Circle go public, we've had Bullish go public, we've had Gemini go public. And then next year, you're likely to see companies like BitGo and Kraken and many, many others coming down the pipe. So, these companies...
Will we be seeing C1 Fund in one of those lists as a big equity partners and when some of these go public?
Yeah, I mean, look, we're actively in discussions with a number of players, right, that are obviously, I'm not allowed to name names, but,
we don't need names. We just need to know you're working. That's it. We just
we're looking at all the credible candidates. I think one of the nice things about C1 is that we're only motivated to invest in the best of the best. So, the goal here is to build a portfolio of up to 30 of the leading companies in the digital asset space, right? So it's a bit like having an index or an S&P of, digital assets, right? Where it's the best of the best. And, from our perspective, our experience allows us to access those companies because we have direct relationships with the founders, as well as the existing investors. And they also like the fact that a lot of those companies, particularly sitting outside of the US, don't have exposure to the US capital markets. So these are companies that are now thinking about maybe going public in the next 2 to 3 years. And, not that I know, but companies like OKX, for example, right, that has intentions to probably go public in the next couple of years, right, in the US. So having visibility, if C1 was involved in a platform like that, could be helpful, right? So what we see is, as a fund, not only do we want to be helpful to our portfolio companies by helping them amplify their story in the US capital markets and give them exposure in the US capital markets, but we can also provide liquidity to their teams, their founders, and to their existing investors because of our permanent pool of capital.
Man, I love it. I love everything about this. I can't wait. Um, this this is the end, guys. I appreciate you coming on, Doc. Looking forward to the future. I'm looking forward to what you have planned, what is to come out. Anything else you would like to say to the retail investors that you think they need to know about the company?
Awesome, Kenny, and thanks again for having me on the show. Look, very simply, this is the first time retail can get exposure to the leading companies in the digital asset space. That has never been done before. There is no minimums, right? There is only exposure to the best companies and companies like Ripple and Figment and Chainalysis and many others that are coming down the pipe. We're super excited, and thank you for the opportunity today. Thank you for allowing us to speak to your audience. And again, if anybody wants to learn more, please get in touch. We have all the information about C1 Fund on c1fund.com. The ticker is CFND, and you can find us on your investment platform. Thank you.
Everyone, peace.